All right, day 3. So welcome. We're going to talk some cryptocurrency today. My name is Michael Vinding. I'm with a company called AP Technology out of Southern California. We do software for banks and credit unions, enterprise systems for both payments and workflow. And we also look a lot into blockchain and cryptocurrencies. So I'm very excited to be here today. I was here 2 years ago hosting a workshop on cryptocurrencies as well. And I think it's fair to say we've come a very long way since then. And just to get an idea before I introduce the panel, I would love to see how many here own some kind of cryptocurrency, Bitcoin, anything. So a couple of people. How many own a cryptocurrency that's not either Bitcoin, Ethereum, or Ripple, let's say? So a couple of people, okay. So probably not as widespread yet, but we'll get into that. And just the last little poll of the day, how many have bought something with a cryptocurrency of any kind? So a couple of people only here. So I think that sets the stage well. I want to welcome the panel we have today. We have 3 very knowledgeable people from the cryptocurrency space. And I'll let them introduce themselves. I'm going to go to, what do we have here? Scott, why don't you go first?
My name is Scott Diamond, local here in Chicago. Just an early interest investor in this space, and just an avid educator. And really where I spend most of my time is just trying to help educate executives, people that are in decision-making positions, in order to start understanding what's going on in the space, because every new technology creates a new language, and every new language has to require some level of knowledge. And it's very difficult to stay up with the space, so that's where what I'm trying to do is just mentor people's education path.
My name is Tom Berg. I founded a company called the Digital Ledger LLC. We're a group that is working now with existing businesses to bring into their ecosystems the blockchain projects, in the top 20, top 30 blockchain projects, a lot of utility, integrating the technology into what we see can help their businesses become more efficient with blockchain, with crypto assets. I've been in this space now for 9 years, and it's definitely been an exciting journey. And now we're definitely looking forward to watching how the businesses are becoming very more open and curious and learning about what issues that we can solve. Obviously, it's not one size fits all. So that's definitely exciting times ahead.
Thank you. Hi, my name is Dennis O'Neill. I'm the CEO of O'Neill Capital Advisors. My background is 25 years of investment banking. Started 2 of the largest regional investment banks here in Chicago. I ran the SoftBank E2 Capital office here in Chicago for a couple of years. I've raised a couple of $1 billion in early stage capital. I've spoken at over 50 venture capital, private equity, and now blockchain cryptocurrency conferences. And I'm going to start this off by answering the question, should banks and business fear or embrace cryptocurrencies and blockchain? I think you have to understand how blockchain started. Blockchain started after the window opened after the crash of 2008, where that trillions of dollars were lost. There was a total destruction of trust of government, of large banks, of large corporations, through of being inept, corrupt, or outright fraudulent. So that opened the window for blockchain and cryptocurrencies. I believe that cryptocurrencies and blockchains will take over the world. It'll be a bigger impact on the world than the internet. Everything will be recorded, every transaction, every record will be recorded on blockchain. And the reason for that is a couple different reasons. Number one, it's significantly cheaper to utilize blockchain and cryptocurrencies. Second is that it settles immediately. Third is that it is more secure. Fourth is that it's completely transparent, so everybody knows exactly what's taken place. And fifth is that because of a digital ledger, it's immutable, which means that the record cannot be changed in any way, shape, or form. So that's the platform that started. Those are the attributes why people are starting to migrate in a significant way into blockchain. The people that are going to be disrupted in a significant way probably starts with the large banks, the credit card companies, and the investment banks. So what we're seeing is an explosion in this industry, especially, not as much in the United States, but overseas. I've spoken in Singapore, Thailand, Malta. I'll be speaking in Macau shortly, Barcelona, and I'm here to tell you that it is thriving in a significant way in the overseas markets. There's, unfortunately, here in the United States, we have a situation to where that the large banks and the SEC, which are basically the same people, have both feet on the brakes, trying to slow the growth of this market in every way, shape, or form. The reason being is that they're trying to protect the interests of the large banks, of the credit card companies, of the investment banks, because they will be cannibalized. They will lose significant market share. And the problem that they have is that they're between a rock and a hard place. If they go and start utilizing blockchain, they're going to lose a significant amount of their revenues and profitability. And if they don't, they're going to be disrupted, and they're going to lose significant market share due to other players that are being able to operate, cheaper, faster, more securely. And as you see the pressure mount overseas, because places like Singapore, Switzerland, Monaco, there is in Asia, it's really, it's being significantly adopted. Now, there are two different sides of this. There's blockchain, which is a technology that can be utilized for maximizing profitability, streamlining, decreasing times for deliverables, and there's cryptocurrencies, which will be funding all these different projects. So, and my idea is that obviously it's not going to happen overnight. I think the U.S. is going to lag this market significantly. It's unfortunate because the leaders of these markets are overseas. They are off to the races. The governments are embracing it. The people are embracing it. And in fact, in China, $15 trillion was transacted in digital currency last year. India, a significant portion of their transactions were done digitally, and that means that it's P2P or P2B, and there's no bank in the middle. So I think that this is the future. It's not if, it's just a matter of when all these companies will start adopting blockchain, because it provides significant cost reduction and significant advantages as far as security and being able to settle immediately. And that's all I got.
So Dennis brings up the blockchain versus cryptocurrency. So blockchain being the underlying technology. And as of, I think, yesterday, there was about 1,900 different cryptocurrencies tracked on one site. Right? So that's quite a few. Bitcoin is about 50% of the value if you kind of sum up the whole thing. So that gets pretty complex pretty quick. In the meantime, there is one Zelle or one Venmo. So how how does that play out, Scott? Like, do we have efficiencies in cryptocurrency that makes it worth it? Because it seems complex from a user standpoint.
Yes, it's whenever we speak at conferences, it's the age demographics are pretty similar, and for a lot of my friends that I tried to kind of convince them to start looking into cryptocurrencies as an investment vehicle in order to be able to diversify their own personal asset holdings. My first response was always around skepticism. And instead of trying to convince them, I said, do you have a nephew or anybody you know who's in college? And call them. And I would usually get a call back within like a half hour being like, holy smokes, like this is all the kids are doing. So when I look at changes that are going to happen, I look at them in a generational paradigm. So if you're part of an organization that wants to take advantage of where the puck is going, so to speak, just keep in mind that although only 2 people or 3 people raise their hand in this audience, if this audience was, the graduating class from the University of Chicago, there'd be 95% of the hands would be up in the air. So I think that's just an important thing to keep in mind.
Okay. And so, Tom, you mentioned your kids do trading, right? Is that right?
My kids, I have 2 sons that are 14 and 11. They have been trading and transacting in cryptocurrencies for the last 2 to 3 years. They have learned their investment strategies. They follow their blockfolios. They feel now that they're a part of a system that they have control over. They're excited about it. They look at me and their mother and say, why do you guys go to a bank? We can do all of this right here. We have this. And that's the only thing they need. They're into gaming, a huge part of video gaming where you are spending, and how many people know what Fortnite is? Right? How many of you guys, our kids, are spending $1,000 to buy skins? Right? But you got to watch them, right? Right? But they are, because they're advancing their ability in those ecosystems. But then when you spend that $800 and build up your reputations, your skins, your gaming experience, what are they? They're stuck. They don't have the ability to sell those. That money stays there. Now, look at now that they're moving into crypto assets, cryptocurrencies, tokens, and stuff like that. As interoperability becomes, and it's here, because we're going to start moving through where they can earn those coins in those games. They can take them, they can sell them, they can exchange them, they can go back into fiat, hopefully in the future they won't even have to. It'll just be onboarding and no more offboarding. So that's their system. They want to use it now and to their advantage, right? And then they sell that Fortnite skin that they spent so much of my money on, right? They can now move that into a different game. And they are monetizing themselves. So yeah, it's I think there's a huge mass media or general public misconception of what's happening here, because everyone's focused on Bitcoin and everyone thinks that all we're here trying to do is take away fiat currency. We're not. You have 3 levels of this. You have payment coins, you have utility coins, you have security equity coins. And when you start seeing this system start working and interoperating, it's right here. And most of the world in the least efficient corridors, they don't have access to banks. They don't have access to maybe one fiat currency, right? They haven't been included what we get to do every day here in the U.S. and in developed countries. You can go to a bank, you have different banks, you have access to different fiat currencies, you can buy things on Amazon, you can do all that, right? They can't. And think about that world, because 84% of them have this. And when they start they can now buy, but they can also sell. So they become part of an economic ecosystem globally that they've never been able to be a part of. So very exciting.
So you're describing a very decentralized kind of new world. And what does that leave the banks? Like, what are the banks doing now? What should they be doing? And will we see this from the big established players? Is that where it's going, or will we see the new startups coming there?
Yeah, this will end up, especially here in the United States, this will end up being kind of a grassroots type of a thing where you're going to have small startups who are well funded. If anybody knows the SoFi story around Stanford grads that decided to start picking off student loans of their classmates, that the same thing's going to happen in finance and in banking. And I think that traditional banks over time will eventually start entering into the space, but they're going to do it from the safety of acquisitions as opposed to actually trying to create something in-house. Because for many financial institutions, for every person who's got a ton of enthusiasm around, and I think an appropriate amount of enthusiasm in this space, there's 25 people that are standing right behind them saying, no, 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 too risky, too risky, too risky. So that's where the innovation is going to come from. There's a group here in Chicago today called BlockFi that is collateralizing crypto for US dollar loans, where you can go ahead and put stuff in an escrow account. They'll give you US dollars. It doesn't create a taxable event, and then you can use you can use that value in order to be able to interact, during this time period in human history where you still have to go around using US dollars to make significant purchases, whether it be a car, a boat, or a house. So yeah, I definitely think that's gonna be where it's gonna be coming from. There's gonna be startups that pop up, and the crypto community is gonna flock to them. And for every American, teenager that is already interacting in this, there's 50 North Korean and 100 Japanese kids, and that's where it really becomes something as an eye opener. Because I like to tell people that in the United States, in terms of our general understanding of cryptocurrencies, blockchain technology, decentralized ledgers, we're easily 5 years behind the rest of the planet because we're so dang conservative when it comes to transmission of value, because the big dogs control not only the banks but the SEC and the rule makers at the same time.
So
Yeah.
that's a good transition. I want to go down the line here real quick, and get the international aspect of it, because you just came back and you've done extensive Japan and all that stuff. So where's the U.S. in relation to the rest of the world? And on an individual level, does it matter that much? Can we, if we are in fact behind here, what are the ways that we can kind of circumvent that and still keep up with what's happening?
Well, the U.S., there's a real big problem in the U.S. Basically, the SEC has given no guidance, no policies. They're governing through subpoenas, which they're pumping out hundreds of them. And that is scaring the institutional money out of the U.S. markets. And they're doing, even if you're a secured token or not, they are doing the full court press, looking for any reason why to serve you with a subpoena. At the same time that they are publicly calling cryptocurrencies, blockchains, crypto exchanges, scams, and all these horrible things. Of course, that in any early market, when it's the wild, wild west, you end up with some bad players that do some bad things, but they're poisoning the well for just in public opinion and institutional opinion. If you talk to the average broker talking about cryptocurrencies or ICOs or crypto exchanges, it's like talking about, a pyramid scheme or something like that. It's not looked well upon. And it's very, very sad, because the idea is that, of course, that the deals that are being done here are, sizable deals. If you get a VC from Sandhill Road, he's willing to put a couple $100 million up, and then you can raise, billions of dollars for a Telegram or whatever the big hot deal is. And then, the rest of the market is at peril, because I think that a lot of the well has been poisoned to a certain degree. Now, when you go overseas, it's the complete opposite. You go to Singapore. I met with the Prime Minister of Malta. I met with the heads of the Stock Exchange of Malta. The Stock Exchange in Malta are starting to use blockchain for trading. When you go to Monaco, you go to Switzerland, you go to all these different countries, and the government is embracing it, the people are embracing it, the businesses are embracing it, and they are years ahead of us. And the problem that I have, the biggest issue I have with that is that this is the biggest, fastest growing new market in the world. It'll be more disruptive than the internet, and the U.S. is giving it away because that they're trying to protect the entrenched interests, which are the banks, the credit card companies, the investment banks, and the SEC is leading the charge. And the problem with the SEC is that all the top people at the SEC and all the top people at the large banks, they just change seats. The top people at the SEC will be the top people at the banks at some point in time. The top people at the banks will be the top people at the SEC. And the problem is that the banks are stuck. They're stuck in a significant way, because if they embrace blockchain, I mean, they can do it for the record keeping and things of that, but once they go into the transactional side, they will be cannibalizing their business. They will be losing hundreds of millions of dollars or billions of dollars, because people will be going B to B, B to P, or P to B, and basically once you cut them out, I mean, they have trillions of dollars that they can push back on, I mean, politically.
Tom?
Did you want to ask a question?
Yeah.
Oh, go ahead.
A lot of doom and gloom, but what about digital asset havings in R3 when that's two banks joined R3? Are they not doing anything?
Well, it all depends on what you're calling digital banks. I'm talking about crypto and blockchain.
I could chime in here a little bit, and
It's not doom and gloom. I mean, the world is thriving. This.
If you're American.
Yeah, this market is booming. It is. Even with the downdraft on the tokens, if you look at how much money is being raised, it is astronomical, and the growth rates are through the roof. I'm just saying that
Two big companies, R3 digital asset.
there's not a lot of cooperation that goes on in those consortiums. I think a lot of it is more just kind of show.
SBI Group in Japan, SBI Group in Japan is a partner of R3, and they have a 61 bank consortium that they are, everyone can look around and your Googles, your Alphabet, Google Ventures and all that. SBI Group is the #1 invested company, financial institution in the world in blockchain and crypto. They're holding over 11 billion XRP. They are doing cross-border remittance into least efficient corridors through SBI Remit. They have built SBI VC Trade, which they are going to be moving that into as a liquidity provider to start moving to this cross-border remittance, saving people money. They're also building in Hong Kong Global as SBI Global, which will look for your derivatives and futures. The aspect of where Japan is at, they are on a deadline. They are on the 2020 Summer Olympic Games in Tokyo. They want to have real-time payments with settlement globally, and they want that cashless system around Tokyo. And this is the area where we need to focus on. They started 4 years ago. Sure, they banned crypto. They stopped it. Then what did they do? They regulated. They regulated exchanges. They set guidelines. They created the FSA, the FSC. They have a crypto czar. They're holding their exchanges accountable. They're regulating them. They're putting in and making sure that they are compliant in security issues, especially after the CoinCheck hack. We are watching this happen over there, and now it's moving to Europe. What did we have yesterday in Germany? They said bye-bye to SWIFT. We are going to build our own independent from the U.S. payment, leaving that system because of the politics. Japan has already basically said we're leaving SWIFT protocol. The U.S. is either going to adapt. India, places like that, have already stated where they thought crypto ban or crypto this, ban that. You can't. All right? You're not going to take away the internet. We're moving the satellites on that anyhow. So what they then had to say is, excuse us. If we don't hop on board, we're going to get left behind. Even the G20 in Argentina during this year in Buenos Aires, they're starting now to understand that the global framework has to come with everybody. Because this is global. This isn't just the United States or the SEC or this and that. It's about taking a whole world as we move into globalization. And now we're moving that tribe. We're expanding it pretty big. And we're going to start transacting in that. And that's where the U.S. needs to actually understand that more.
This is a payments conference, so let's just talk about just payments. And so since most of you don't own Bitcoin or own any crypto, it's still kind of a foreign concept to you. But real world examples, I work with insurance companies that have to sometimes move money very quickly. And they're starting to learn that, wait a minute, I can move $20 million in 30 minutes for $6. What is that going to do to cross-border remittances is huge. Somebody on the Bitcoin network just 2 or 3 weeks ago moved $300 million for 4 cents. From one wallet into another, which I'm sure he controlled both, but he saw the mempool was so low, he just wanted to be able to show, because that's where you're going to hear a lot of the negative press is around speed and fees. And if you want to talk about fees in the traditional financial network,
Sure.
then we can have a conversation. But if you're going to try to tell me that Bitcoin fee structure is too expensive, it's not if you know what you're doing. And again, from a generational standpoint, people are going to realize that. And when you can move hundreds of thousands of dollars on a Sunday night for, I think I moved $400,000 for a big insurance company a couple Sundays ago. And they were afraid about what the fee structure going to be. And I kind of did a quick little math. I said it was between $1.50 and $1.75. So they were afraid that I was going to ding them for like a $70,000 transaction fee. And I'm like, or a $7,000 transaction fee. I'm like, I said, don't worry about it. I'll pick up the $2.
I can send someone $300 right now. It's going to cost me 1/10 of a cent.
Sure.
In Australia right now. They'll liquidate that through CoinSpot. Their fee, why they'll pay a high fee? Because of the banking system will charge CoinSpot that fee. But for me to send that person $300 while I sit right here, it took 2 seconds and it cost me under a penny.
Sure.
How do we deal
I
with KYC, AML?
Yeah, that's
like
a
how do
big factor.
we wrap that world around the fast anonymous transactions?
Sure. I think I'd like to, take a step back here and just put this all in perspective, is that you have to understand this is the beginning of the beginning. Less than 2% of all investors own a cryptocurrency. So,
Is it that high?
yeah, so when you're talking about a technology that's going to change the world, blockchain and cryptocurrencies, that is going to take over and change every industry, every company, down to the smallest levels, because all transactions and all records will be kept on blockchain. You're talking about, a once in a lifetime, or maybe second in a lifetime after the internet, opportunity to be able to, this is going to change everything. And it's going to change everything in a very, very, very good way. As far as the KYCs, I think that, that's beholden to the, on the wallet guys and on the exchanges. They have to, do the KYCs, and it's their responsibility to be able to do that. And we'll see how that all shakes out, because obviously everybody's looking to be a regulated exchange now. That's the reason why a lot of people are going to Malta, they're going to Singapore, they're going to Switzerland, they're going to Monaco, because they will license, you'll be a licensed, crypto exchange, opposed to the ones that are unlicensed, which are, could be possibly under, they could be shut down, or they could be, definitely investigated. So, I think that those are the two worlds.
Yeah, it can get complicated too, because you're talking about institutional transactions versus peer-to-peer. When I tip my pizza delivery guy, I don't know who he is. I don't go through any KYC, like, well, what's your background? So at the end of the day,
But it's presumably a smaller amount.
yeah, so I think the concern over the whole KYC conversation is actually more of, again, this generational thing where, as people start matriculating out of their industries and new people take their spot, there's going to be less and less concern over that. So there is a term that's used in the crypto world where transactions are trustless because you don't have a third-party intermediary, meaning there's no reason to have trust. Now, can bad, nefarious things happen within the world of crypto? Sure. But the number one currency used for bad things around the planet is called the United States dollar.
Yeah.
So really, crypto doesn't do anything. And for most people, they believe that it's very anonymous, and it can be. If you're sophisticated enough, you can become pretty anonymous. But at the end of the day, transactions and wallets can be pinned back and forth and back and forth. So you can be like, hey, where did you get that 20 Bitcoin? Because it came from this wallet, which originally started from this wallet. And it's like, oh, that came from my cousin. It's like, well, then we'd like to talk to your cousin. So when it comes to that, there's going to be solutions that are actually probably even better than people walking around with a briefcase and duffel bags full of cash.
To add to that, there's two things that always crack me up is that the KYC and the AML, I mean, cryptocurrency did not invent or create money laundering. We didn't create the ability to buy illegal drugs, okay? They existed before Bitcoin. If I go to a bank today and I withdraw $20 from my ATM, and if I go buy drugs with it, I'm going to hand this to somebody to get the drugs. Then I'm going to leave. Can you track that? Did you know that transaction took place? No. Did I get a receipt? Did I get a receipt from the drug dealer? No, I did not, right? The criminal aspect of all of this is that they actually think Bitcoin is anonymous. Well, we've already seen this. We're tracking terrorist money through Bitcoin. We're tracking cross-border payments through Bitcoin. We nailed the Russian operatives for the election doing what? Transacting in Bitcoin. If they would have used fiat currency, we would have had no idea, right? So there's the onboarding process now, which you're seeing even in Japan right now. You have, as the regulations are being set, you can go to 5 different main large banks in Japan now, use your bank card, and buy cryptocurrency. That's where, so the people there, yes, all my exchanges that I'm on, if I have a fiat pairing on that exchange, I have to give them my ID, I have to give them a photo, I have to give them, routing numbers to my banks to liquidate. They know who I am. Does it matter if I go on to then I buy from one exchange and transfer to a Binance, which doesn't have a USD pairing because I can't liquidate from Malta? But I can exchange into different cryptocurrencies that offer different utilities and different value. Before, I was just stuck with USD. And that's where people have to start understanding that aspect of it. Yes, we do need regulations in this. We do need the exchanges to be regulated. We do need them to understand that. And the banks shouldn't fear it. Accept it. Be a part of it. It's a new revenue stream for you.
Yeah.
Secure. If you offer security, I would have, banks right now, what did they use? How did banks used to make money? By lending. Not, but most people say, oh, I just hold my money in the bank, this and that. Fine. Why can't you look at a cryptocurrency, secure it, now that stuff and insurance and custodial issues are being solved? Why can't I just hold it there?
Sure. I think that.
I think actually are we out of time? So very quick.
Yeah, I
wrap up.
just want to, the biggest challenges right now in the cryptocurrency world is that, number one, is that most people are not sophisticated enough to set up a wallet, or at least, and the issue with that is that it's becoming easier. Places like Coinbase are, making it very, very simple to do so. The second part is that when you're a novice, security becomes an issue because if you don't set things up properly, you can easily be ripped off. Third is that understanding the dynamics of what to buy and how to evaluate different types of currencies and things of that sort. So now I do believe that, and then the other part is that Bitcoin, typically takes 10 minutes to settle, but now we have coins out there that handle all these issues. One I'm involved in is Futura coin, FTO, which they settle immediately, they have significant security, easy to set up the wallet, and then now they have developed ATM machines where that you can buy, sell crypto, or turn crypto into fiat, just as easy as using an ATM.
All right,
So,
I think
okay,
we're
that's
probably
all
gonna
I got.
So yeah, obviously it's a very big topic. We could probably talk about it for hours and hours. We're all passionate about it.
Time flew by.
So yeah, no, we did. So I want to say thank you to the panel very much. Thanks for
Thank you
coming,
so
and,
much.
have a good night.
All right.